Also, on the local front, Korea's acceptance into the World Government Bond Index starting November next year is fueling much anticipation over the potential inflow of foreign funds into the local bond market. Our correspondent Moon Hye-ryeon files this report.
The inclusion of South Korea's sovereign bonds in the world's largest bond index is expected to bring a number of positive economic effects. FTSE Russell announced last week that the country would officially join the ranks of its benchmark World Government Bond Index starting November 2025, after being placed on its watch list since 2022. South Korea met the WGBI strict criteria for market quality, liquidity and accessibility through reforms like extended foreign exchange trading hours and simplified foreign investor registration. Following the announcement, President Yoon Suk-yeol spoke of its major economic implications.
이번 세계국채지수 편입으로 약 75조 원의 글로벌 투자 자금이 유입될 것으로 전망됩니다.
75 trillion won, around $55 billion, comes from taking South Korea's 2.2% portion of the index that is linked to roughly $2.5 trillion of total capital. The index is closely watched by major institutional investors, and once a country's bonds are included, these investors are likely to buy them to ensure their portfolios match the index. The influx of global investment is also expected to affect interest rates.
Interest rates are expected to stabilize, reducing funding costs for people and businesses.
Higher demand for bonds lowers yields as investors accept lower returns for stability. The Korea Institute of Finance expects WGBI inclusion to reduce government bond rates by 0.2 to 0.6 percentage points, making corporate bonds more attractive and lowering company funding costs. Analysts also predict greater stability in the foreign exchange market.
Korean currency markets, the won exchange rate tend to be volatile in part because the Korean won-dollar market is so small.
This means that any large transactions can make the market volatile, so a larger market with more debt could stabilize the won's exchange rates. Going forward, the government announced that it would be resuming short selling in March next year, as it was reported that FTSE Russell postponed its decision in line with this move. A ban on short selling went into effect last November, and Seoul has since been testing a new monitoring system to detect illegal short selling. Moon Hye-ryeon, Arirang News.